There we go. Okay. I think my audio is back. Let me know if you guys can hear me. Let me know if I'm coming through right now. I think my volume should be coming through. Give me a 1 in the chat box if you guys can hear me. Let me know if you guys can hear me right now. Hopefully we got the volume fixed. All right. There we go. I think we're back on. Awesome. Want to extend a message to you guys by saying thank you so much for joining me. If you were here with me on last session, I got a lot of comments from you guys telling me that I wasn't live. So I am live today, and I want to make sure that I can extend an olive branch out to you guys and say thank you for joining my live sessions, and thank you for being a subscriber to my YouTube channel. What I want to do today is I want to answer some questions that you guys are putting inside of the chat box. I'm going to take the time to answer them in the order that they came in on. But before I answer these questions, please do understand that if you guys are looking to figure out ways to reduce your overall tax bill between now and the end of the year, there's no better time than to join the Tax-Free Wealth Challenge. We'll be conducting that over the next 2 weeks. During those 5 days, I'll be teaching you advanced strategies and showing you how to implement them into your tax returns prior to the end of the year. I know a lot of people are looking for a tax strategist right now to be able to help them. Allow me and my team to be able to help you guys during the Tax-Free Wealth Challenge. Please visit the link below. Now, let's jump in. I did see some questions come through already that pertain to LLCs, and I'll answer them in the order that they come in. So please bear with me. First question that came in from the Cottney Show is, what is the appropriate, hopefully I'm saying that right, Cottney Show, is that correct, the Cottney Show? What is the appropriate number of rental properties to own before making your LLC? This is a really great question to ask. I think personally, if you ask a CPA, does it make sense for you to have an LLC for an investment property? Or you ask a tax professional, does it make sense for you to have an LLC for an investment property? They're going to say, does it make sense for you to wear a jacket when it's raining outside? The answer is going to be yes. And it's simply to protect yourself, right? I believe that if you're going into business, it's very important to separate yourself from that business. And an LLC can help you do that. You limit your liability from the business. If something were to happen to your business, God forbid, or your investment property, there's asbestos, somebody slips and falls, you don't want your personal bank accounts, your personal income, your finances to be compromised. You would only want whatever's inside of that business to be liable. And that's why we call it a limited liability company. So I always recommend any person who's getting into real estate to have an LLC. And if you're trying to run a business like a real business, then you should probably take those steps to set up an LLC. Great question coming through already from Cottney. All right, I like a question where you guys are letting me know a little bit of information. Here's a great question that came in from, I believe, D Crypto. I've had my business open for almost 10 months now, generating $75,000 in profits. I've never opened a business bank account. What steps do you say I should take after opening the account as soon as possible? Great question. So if you're a business owner, you should probably separate your business from your personal finances, which is why we go through the extent of establishing an LLC. But if you're a sole proprietor, you can go to the bank and open up your own business bank account and have all of the income flowing into the business bank account, which means all of the expenses that you incur would come directly out of this business bank account. And that way we can have best practices as it pertains to filing our tax returns. You're going to have a bit of a headache when it comes down to your bookkeeping, because if you have all of the income showing up into your personal accounts, what's personal and what's business? And you're spending business money personally now. So this can be a very big headache. And I could see somehow you making a mistake on your tax returns, including things that you shouldn't be including, or leaving things off of your tax return that should have been included. So if you're trying to be a smart business owner, I do recommend doing business inside of a separate bank account from your personal account. Get that open as soon as possible. You're already at $75,000 in profits. I'd start looking at whether or not it makes sense for me to have an S corporation. If your income's going to be consistent like that, the benefits do outweigh the cost for you to look into establishing an S corporation. Yes, tax season's coming, guys. I know a lot of people are stressing out. We have less than 67 days between now and the end of the year. My team already knows who we're going to be filing tax returns for this upcoming year. So it's extremely important that you get in touch with us if you want to be one of those people. All right. Another question came in is, hi, Carlton. This one's from PN. Hi, Carlton. If I take money out of my 401k to invest in a rental property, do I have to pay taxes on it? Guys, anytime we pull money out of a 401k to pay ourselves before we are 59 and a half years old, we have a 10% penalty, plus we pay ordinary income taxes on the money that we pull. So the question is if Carlton, if I pull this money out of my 401k to invest into rental real estate, do I have to pay taxes? Well, it depends on what strategies you're using. But the short answer is yes, you're going to pay taxes on the amount of money that you pulled out of your 401k plus the 10% penalty. Now, can you invest into rental real estate and create enough tax deductions to offset the money that you would have paid taxes on, aka the money from your 401k plus the 10% penalty? The answer is yes. I have clients who, after meeting me, find out that they qualify to be either a real estate professional or they can leverage the short-term rental strategy. And they'll dip into their 401k account, pull money out to invest into rental real estate, knowing that they have enough losses on the tax return to offset the tax associated with pulling from their 401k and the penalty. So if that's something that you guys are interested in, definitely look into Tax Alchemy. Definitely join the Tax Free Wealth Challenge. We'll be going over that strategy on how to use rental losses to offset your W-2 or 401k income. Okay, this one's coming in from G Beezy. Carlton, I just started my company and barely going to be profitable in 2022. I have about $20,000 of business upgrades and needs. Should I wait till 2023 to do those or just get it done in 2022? Ooh, this is a really great question. So let's go over this one more time. Carlton, I just started my company and barely am going to be profitable in 2022. I have about $20,000 of business upgrades and needs. Should I wait until 2023 to do those or just get it done in 2022? So the first thing that comes to my mind is if you're making purchases, upgrades, improvements, we have bonus depreciation going from 100% down to 80% next year. So my mind is kind of around this whole bonus depreciation thing. Do you need the bonus depreciation this year? How low are your taxes going to be if you're barely profitable, only 20K in business income? So now we're in a situation where we can see that you're probably going to be more profitable next year. Does it make more sense for you to wait until next year in which you're in a year where you're making more income to take those deductions, or should you capitalize on those deductions right now? This is where it comes down to what your goals are and what you have going on with your other finances for us to be able to determine if you should pull the trigger on the strategy or if you should wait to pull the trigger on the strategy until next year. I would want to know if you're single, if you're married, do you have other sources of income? Where is your savings accounts at? What is invested for you? And this allows for me to make that decision on whether or not you need those tax savings right now, or if you can wait to get those tax savings in a year in which you're more profitable. Great question. All right. All right, guys. Good question coming in. Carlton, this is from Oz the Viator. Oz the Viator. Carlton, I have an S corporation. Can I pay for my son's education? He's on payroll and use it as a deduction if his education is being financed? Ooh, I get this asked all the time. I want to ask you guys, is education tax deductible? Put a 1 in the chat box if you think it is, and I'll wait for you guys to answer this. Put a 2 in the chat box if education is non-tax deductible. Put a 1 in the chat box if you guys think it is. Put a 2 in the chat box if you think education is non-tax deductible. I will wait for you to answer this. Take your time. What do we think? What do we think? What do we think? Put a 1 in the chat box. Put a 1 in the chat box if you think education is tax deductible. Put a 2 in the chat box if you think it's non-tax deductible. Okay, let me jump back up to that question. Read it one more time. One more time. Okay, so the question came over from Oz the Viator. Carlton, I have an S corporation. Can I pay for my son's education? He is on payroll and use it as a deduction if his education is being financed. A lot of you guys answered 1. Majority of you guys answered 2. One person answered it depends, and that is the correct answer. We have to look into whether or not you're offering fringe benefits. Is your son on payroll W-2? You have an S corporation, so I'm assuming so. He's being offered a W-2. What other benefits are you giving your son? Is there health insurance being involved? This is kind of a question where I have to open up more to understand. Could you create a grant for your son by setting up a foundation? And should we do that instead of having that ran through the S corporation? My mind goes to so many different places. I would want to ask more questions. Hopefully this person's still in the chat. I want to get some more questions coming over from you. Hopefully you hear me. I want to know that information. Great question. How do I convert my brokerage stock account into a separate business with write-offs? Ooh, this is a great question. So I work with a lot of clients who are doing day trading or some type of trading, or they're trying to trade. And they started trading off in their personal accounts. And when they find out that there's benefits to being a business owner, they want to start trading inside of their new LLC that they've set up for themselves. So how do they start trading inside of this new LLC when their brokerage account is associated to their social security number? The answer is that they're going to have to open up a new account inside of the name of the EIN number and start trading inside of that account, which means the activity that was happening inside of their old account, unless the platform that they're using allows for them to make that transfer, that means that all of those assets are still in that account associated to their individual name. So this is why it's super important to kind of have that conversation ahead of time with your tax professional before you get started in trading. Are you doing this as a hobby? Is this something that you want to really turn into a business, right? Are you doing this kind of passively, or you're more active in this? And we should be looking at taking the mark-to-market election or leveraging these losses to offset other forms of income that you may have. So great question. I get that asked all the time. And I'm looking for more questions like that. All right, let's see this one coming through. Carlton, this one's coming from Cal Burton. Carlton, I'm getting my LLC set up right now, and I'm talking with the tax advisor on the 31st. But I'm trying to make sure I've been putting away enough for taxes. I've been assuming 20%. And I live in Washington. Okay. So it's hard to know how much you need to put away for taxes unless you are working with a tax strategist. And the reason why is because what's today's date? Zach, what's today's date? 28th of October. The reason why is because the tax strategist, let's see if we can get this bigger. Is because the tax strategist is going to take your income from January 1st all the way up until October. Today's the 28th? 28th? All the way up till October 28th. You've earned income from this period. And from October 28th until December 31st, we need to determine how much more income you're projected to make. Let's say you've made 200 grand so far from January 1st to October 28th. We can forecast with the remaining 6 weeks we have left in the year what you're expected to make with that time you have left, right? The 61 or 65 days we have left in the year, right? Maybe it's another 60 grand. Now we take that income, that total income, and factor it into the 2022 tax brackets to determine what you're going to owe versus what you're going to receive back in a refund, which you might not be receiving any refunds if you're a business owner. Let's just be honest. So I really want to know this number right here. This right here is your liability. That's what I want to know. And this allows for us to make decisions. As soon as I know how much you're going to owe, we can start making decisions around what we can do to offset that income, right? So in the meantime, Carlton, how can I figure out how much I should be budgeting for my taxes? Well, you can try to do this calculation yourself by pulling open the tax brackets offline. The government has the 2022 tax brackets listed online. Let me see if I can pull these open for you. I could jump, right, Z? I don't think it's set up. Let's see. Yeah. I'll make that this. Cool. All right. There we are. Give me a 1 if you guys can see this. Give me a 1 in the chat if you can see the tax brackets here on the left of me. Want to make sure you guys can see that. Okay, great. Thank you. All right. So if I'm somebody that's single and I made about $200,000 or $260,000, I got to jump over here into the tax brackets and I got to start first calculating the amount of money I make between $0 and $10,275. That's going to be taxed at 10%. The amount of money I make between $10,275 and $41,775 is going to be taxed at 12%, goes on 22%. And then I will round out right around the 35% tax bracket if I'm single. And then, of course, those are adjusted if you're married filing joint. So you can calculate the amount of federal taxes that you're going to pay right now. You just have to use the brackets. This takes a little bit of time. And to be completely honest, you would rather have a tax accountant doing it because not only are they going to factor in the tax brackets, they're going to factor in your deductions too, right? Maybe you're contributing to a 401k. Maybe you have a home. Maybe you're paying into mortgage, interest, property taxes. You want them to factor in all the deductions that you qualify for. And then we know your true net, your true liability. And then from there, we can make financial decisions around what to do to adjust your taxes. All right. All right. Let's keep going. Ooh, this is a good one. Can I use my LLC to buy a house for myself? You know, you can use an LLC to purchase just about anything. Does it make sense to use an LLC to buy a house for yourself? Most likely not. Most of the time we're using LLCs for investment properties because LLCs are perfect to hold our assets in. Limit liability. But if you're the one living in your own house, which means it's a primary residence, are you going to be liable to yourself? This is when probably homeowners insurance and a simple umbrella policy will do. And so we primarily use LLCs for investment purposes, not for primary residences. Yolanda says, Carlton, I'm not sure if my LLC is set up correctly. I think a lot of us who are sitting on here probably have that same question. And really comes down to is what is the intention of your LLC and how much revenue is coming into that LLC? Many people who meet me, they find out that I am very particular when it comes to who knows who owns your LLC. And so you might have your LLC set up in the state that you operate in. And then you'll watch a video of mine or get on the phone with one of my consultants and find out that we also sometimes recommend Wyoming companies or we'll sometimes recommend Delaware companies. And you think that you need a Delaware company or that your LLC was set up. It might not be that case. It's important to cover home plate. And what I mean by home plate is where am I domiciled, right? Where do I live? Currently, I'm in the state of California, right? But if I start an e-commerce business where I'm selling clothes online, couldn't I do business anywhere? If I'm day trading, couldn't I do business anywhere? The answer is yes, I could do business anywhere. But where do I live 6 months out of the year? And that's in California. So even though I might set up a company in Wyoming, let me make this a little bit smaller. Even though I set up a company in Wyoming or I set up a company in Delaware, I'm still doing business in California if I, Carlton Dennis, lives in California. So that means that my LLC that I choose to set up in Wyoming or Delaware is going to be foreign to the state of California, which means I'm still going to pay state taxes in California, federal taxes, and any other applicable taxes that I have. Plus, I'll still have the $800 filing fee. Okay. Now, it's always recommended, and this is something that you have to talk to your tax professionals, maybe even speak with a tax accountant. It's always recommended to have your business set up in the state that you're domiciled in if you have an ordinary income business, such as me doing e-commerce or even me doing day trading. If I'm in California, these two entities should be set up here in California because I'm living 6 months in one day in California, which means I'm going to pay California state taxes. Now, California may not have the anonymity laws like Delaware or Wyoming. So what I can do is create Delaware or Wyoming as my parent company to my California LLC. Oops. To my California LLC. Okay. By doing this, I can get the anonymity that I'm looking for that Delaware offers while still conducting business here in California and taking my name offline. Great question. Carlton, I am a state employee. This is coming over from Edward Ramirez. Carlton, I am a state employee and at the same time, real estate agent and investor with a couple of properties. Should I take advantage of Section 179 and bonus depreciation this year and get a car for myself? That's a great question. So let's go over this. I'm a state employee. At the same time, I'm a real estate agent and I'm an investor with a couple of rental properties. Okay, so we have two different businesses. So we have W-2 income, 1099, and rental income. Okay, these are our three sources of income. Okay, these two sources right here are subject to federal taxes, state taxes, and Social Security and Medicare tax. Okay, this is just subject to Fed and state. Okay, so just make sure we all know type of income. Now, the question is Carlton, should I leverage code section 179? Whoa. Should I leverage code section 179 plus bonus depreciation prior to the end of the year? Well, I love 179. I love bonus depreciation. And unfortunately, I can't tell you what to do without being engaged with you and having a signed engagement agreement. But let's just say I was sitting in your situation, okay? And I'm trying to figure out what I can do to leverage my situation to reduce my overall taxes. I'm working as a state employee. I'm probably making a good amount of income W-2. I'm working as a real estate agent. I'm probably closing a few transactions in the year. And I said I had a few rental properties. That's correct. Yeah, you have a few rental properties. My next thing that I would want to know is, are you married? These are the questions that I would want to know, that I have to know. Are you married? Because I got to know if I can leverage a wife if you're married to a wife, or a husband if you're married to a husband. I need to know if you're married. I need to know if you have kids. I need to know if you're a homeowner or if you're renting. I need to know what vehicle you currently own. I need to know how much liquidity you have. Okay. So these are the things that I need to know right away. And I'm going to explain why I would want to know these things. Okay. I would want to know if you're married simply for the fact that you have rental properties and we can use a spouse to qualify as a real estate professional or qualify you as a real estate professional. And if you do not qualify as a real estate professional, I also need to know, would either one of you qualify for the short-term rental loophole that gets you around the real estate professional status? Okay. So those would be the two things I would want to know first. Are you married? Is someone on the tax return going to be able to qualify as a rep? If you don't qualify as a rep, would you be able to leverage a short-term rental property between now and the end of the year? Do you have children? If so, what are their ages? I need to know this because if I'm going to start helping you reduce your tax bill before you do code section 179 plus bonus depreciation, I need to know whether or not it makes sense for me to set up a management company that manages your entities, such as your investment properties or your real estate brokerage business, or a management company that manages both of these businesses, right? Or maybe your kids are helping you out in the real estate brokerage, or your kids are helping you out by managing those rental properties and they're coming to and from those investment properties with you. I don't know yet. So I first need to figure out if you even have kids, and I need to know what their ages are. So that'd be the second question I would ask. Okay. I want to know if you're a homeowner or if you're renting. The homeowner or renting question lets me know if I'm going to be taking a home office deduction plus the Augusta rule, or if I'm just going to be taking a home office deduction. Okay. Vehicles. This lets me know if I'm going to pay taxes if we were to sell a vehicle or trade in a vehicle, or maybe you truly do need a vehicle. And then we can start talking about this conversation around the 179 plus bonus depreciation. This is like this is what I do last. I don't want to implement the 179 plus bonus depreciation until the very end of your tax strategy. I'd rather leverage everything else. Then we'll have you go buy a car, right? Because I want to keep as much money in your pocket, which is why I asked this last question, your liquidity. These items are just some of the questions I have to ask. Other questions I'm going to ask are, what's going on with your family situation? Do you have brothers, siblings, or family members that I need to know about? Is your parents getting older? I just need to know these types of things. Does your spouse have other businesses that we don't know about? Do you guys plan on staying married? Do you like the state that you currently live in? I do have these questions that I ask you, because what I'm not going to do is I'm not going to create a tax plan for you in this current moment. You telling me, hey, Carlton, I'm making a couple of $100,000 and I got a couple investment properties. I'm thinking about buying a car and doing bonus depreciation. Like, that's just a moment in time, right? Where's the trajectory of where you're going? What is the end goal? And so I have to spend more time asking the right questions before I give any advice in that regard. All right, here's another one coming in from Raj. I currently use my LLC as a consulting business. However, I'm looking to convert this LLC to manage other LLCs that hold investment properties. Can this be done, or do I need to file paperwork? Okay, great question. So let me repeat. I currently use my LLC as a consulting business. I'm looking to convert this to manage my other LLCs that hold investment properties. Can this be done, or do I need to file paperwork? No, that's fine. You can keep that business as a consulting business, and that business can consult to your other LLCs. That's completely fine. So let me just give you an example. Let's just say I'm him, and I have an LLC that was set up for consulting, and I have investment properties, and these investment properties are in Wyoming, Idaho, and Minnesota. And let's just say each of them are sitting inside of their own LLCs. I can have my consulting LLC manage my operational rental LLCs. Yes. And then I can also upgrade my operating agreement to state that. Yeah, absolutely. Those are things that you can do. Those are things that my team would do for you. It's a great question. All right. Do I file personal taxes and business taxes separately as a sole proprietor? Ooh, this is a really good question. This is coming over from Yolanda. Yolanda Williams said, Carlton, do I file personal taxes and business taxes separate? So one of the big reasons why I am a big fan of multi-member LLCs as opposed to single-member LLCs is because single-member LLCs get filed inside of your 1040 tax returns on a page called Schedule C. Okay? Your 1040 tax return is your individual return. Okay? So your individual return is attached to you. This records all of the income you made for the year, all your deductions that you have. It's your tax return. Okay? Now, when you're a sole proprietor, Your income and your expenses from your sole proprietor business, Yolanda, they get filed inside of your 1040 tax return. Is that great? Depends who you ask. If you ask me, I'm going to say not really. And the reason why is because a 1065 tax return, 1065 tax return is a partnership tax return. And yes, I am telling you that you're going to need to have a partner, is a partnership tax return. This tax return gets audited on average 33% less than this tax return. So if believe you me, I'm all about following the rules. Like, let's just be honest. Like, I'm not going to try to not follow the rules, but if there's a way for me to get audited less while following the rules, I'm going to do that option, right? So if I can fly under the radar, I would rather fly under the radar. The reason why the 1065 is audited less than the 1040 Schedule C business is because, one, taxpayers make way too many mistakes on their Schedule C businesses. There's so many sole proprietor business owners. There's so many people who woke up one day, had the idea that they're going to start a business, go to their tax accountant and says, oh yeah, I had an idea of starting a business. I didn't get it off the ground, but here's all my expenses. And they're writing things off that they most likely shouldn't be writing off. And then they get audited, and those are easy wins for the IRS, right? And then you upgrade. You're like, okay, well, maybe I'll take it a step further and set up a single member LLC. Okay, well, you're still a disregarded entity, which means your tax returns get filed as a Schedule C still. So you're still just as susceptible as the person as the sole proprietor, or that's running a business that's borderline a hobby, right? The only difference that is between you is that you've established a legal entity with an EIN number, and you separate the liability from yourself. You're not saving yourself any more on taxes by having an LLC. Now, when you convert your LLC to a partnership LLC, this is when your audit risk goes down, because now inside of your 1040 tax return, we no longer see a Schedule C at all. All we see is a K1 form that reports just one number. Literally, it's just one number. I don't see all of your deductions. I can't see how much you spend on advertising, how much you spend on car, vehicle, equipment. I don't get to see all of that as an IRS agent. All I get to see is plus or minus and the number. That's it. And so your audit risk tends to go down on this side of the table because of what they see on this side of the table. Does that make sense? Hopefully I'm simplifying that enough for you guys. Hopefully you guys like that. Okay. Let's keep going. You know what? I'm also going to jump in because you guys reached out to me on Instagram. I have some questions that came in on Instagram chat. You guys get those, right? Those questions that come. Ooh, okay, let's see if that's okay. So I get those questions that come through on the polls that you guys send me on Instagram. If you haven't already, subscribe to Instagram too. We're there. Okay. Carlton, what can this is coming over from A_J_Dominguez. Carlton, what can a W-2 employee do to lower their taxes besides a 401k and IRAs? Welcome to my playground. Let's talk. So as a W-2 taxpayer, I understand that you are maxing out your 401k. Please do not get on the phone with my tax team and tell us that a tax strategy that you're leveraging right now is maxing out your 401k. That is not a tax strategy, okay? That is a government-assisted program that you are using to reduce your tax bill, okay? So we don't look at that as a tax strategy. So you're just putting money into your 401k account. It's dropping down the amount of taxable income you have. That's not really a tax strategy. You can't touch that money until you're 59 and a half. You don't know who's going to be the president by the time you're 59 and a half. And you don't know where the tax rates are going to be by the time you're 59 and a half, do you? Neither do I. So great question, Carlton. What can a W-2 employee do to lower their taxes besides the 401k and IRAs? Most of us remember, seeing this somewhere, right? Have you guys seen this somewhere? I don't know who was the guy who created this, where he was like ESBI. But the guy who was talking about this whole quadrant here, I think it's called the cash flow quadrant, right? The guy who was talking about this whole quadrant here, what was the purpose of him doing this, right? He was trying to get us to go from being an employee to being a specialist or a small-based business owner, and going from a specialist or small-based business owner to a big business owner, and going from a big business owner to a professional investor. This was the path that Robert Kiyosaki taught on in his book, Rich Dad, Poor Dad. The reason why he talked about this is because employees are paying upwards to 40% in taxes and have zero tax deductions. The reason why is because you are working for somebody else. That is the reason why. You've given up the control, okay? Nothing wrong with being an employee. Absolutely nothing wrong with being an employee. And I would tell a majority of employees to stay in their jobs because they're making way more money than possibly starting a business sometimes. I just recommend them to start a business on the side. But that's the trade-off. You get no write-offs. And then maybe you decide to start that side hustle, right? Or you decide to go to school longer than other people and you become a doctor or a lawyer or an attorney, a specialist, and you find out you're paying even more taxes because you're making even more money than the average folk. And you still don't have very many write-offs, right? And then maybe we get to a place where we get to grow a business and become a corporation and be able to hire employees and invest in oil and gas and do things that the government wants us to do. And we can pay as low as 20% in income taxes as being a big business owner. But what we can do to pay 0% in taxes is becoming a professional investor. And to be completely honest, you can go directly from E to I without having to go to S and B. I promise you that. I have taxpayers all the time that are working with me who have zero investment properties. And then after finding me, they're like, Carlton, we can use real estate to offset our W-2 income. And I'm like, yeah, absolutely. We don't have to put money into the 401k unless you want to. We don't have to put money into IRAs unless you want to. We can use investment properties to offset your W-2 income. And what we do is we break it down into two different ways. We're either going to leverage reps or we're going to leverage short-term rentals. The reason why we're going to do this is because the only way you're going to qualify as a real estate professional is if, one, you can do the 750-hour test, and two, you can show the government that you're spending half of your time in your rentals than any other thing, okay? It's very hard to do this unless you have someone on your team, like a spouse, who can help you qualify, or you're already in real estate. You're already doing real estate as your business, okay? Let's just say you're not doing real estate as your business. And you say, Carlton, I'm open to becoming a real estate investor. I'm open to investing and getting an investment property. Matter of fact, when I think of myself in retirement, I see myself having multiple investment properties that I can travel to and from, and my children can eventually own if something were to happen to me and my wife, or something were to happen to me and my husband. These are the conversations that I have with taxpayers. And when they tell me that they're open to it, what I do is I help them shop short-term rental properties. Because underneath these types of properties, I don't have to manage them for 750 hours. I only have to manage them for 100 hours. I don't need them to show half of their time in rentals. Now we're in a situation where they can materially participate. And obviously, these are things I would have to teach you how to do. They can materially participate. And now I can use all of the strategies that I leverage for real estate, such as the cost segregation study, to be able to offset their W-2 income. Okay. So this is the strategy I like to get to for the W-2 taxpayers. I can't get to this tax strategy unless I know which route we're taking, right? There's two different routes we're going to take to be able to offset your W-2 income without putting money into retirement accounts. Now, last but not least is we could look at foundations and being philanthropic. You would have to be open to being philanthropic, which means that you would need to be willing to not only move money over into a foundation, you got to be willing to use the money inside of the foundation for philanthropic purposes, knowing that the money is owned by the foundation, no longer owned by you, Mr. and Mrs. XYZ, right? So again, working with a professional definitely can help you navigate the waters of that. Great. Guys, I see a lot of questions coming in. What is the short-term rental strategy? If you aren't aware of what the short-term rental strategy is, I am going to do a full hour-long breakdown of the entire short-term rental strategy during the 5-day tax-free wealth challenge. This challenge is coming up in a very short time, November 14th. It'll be from November 14th through the 18th. During those 5 days, you and I will have a chance to spend time with each other where I get to understand your situation. Then we talk through all these strategies and we start to figure out how I can get them implemented into your tax returns prior to the end of the year. For those who are willing to work with me, yes, that requires me actually getting on a call with you and us having a little bit of time to start discussing what we can do to get you into an investment property or how we can leverage maybe a property you might already own between now and the end of the year. Guys, I'm loving going through these questions. Instagram, want to say thank you. I have a lot more to go through, but I'm going to try to jump back over to YouTube because I see YouTube. We got some more people jumping in. How are we doing today? Ryan, Kyle, Slay, Denise, Calvin, Aiden, Philip, Anita, Raj, Molly, Merced. Wow, so many people are in here right now. It's amazing. All right. Let me see what else I can do to answer some more questions. Okay, here we go. What's up, Carlton? This is from Toxic DMV. What's up, Carlton? I set up my LLC using a real estate NAICS code. Can I have side income from Turo deposited into my business account to help fund my first investment property, or just set up another entity? Ooh, this is a great question. So the NAICS code or SIC code is the code that's like associated to your LLC or to your S Corp or to your corporation. This code lets the government know the nature of business that you're going to be doing. And the reason why these codes are important is, one, there's industry standards around the amount of income that is made for certain businesses and the ability to be able to give you loans. This is factored in with lending corporations. They look at your NAICS code to determine how much of a loan they can give a business like yours, right? And so if you're starting a real estate business and you've already placed the NAICS code for real estate, it's kind of hard to get loans for real estate as compared to like a consulting business, because typically consulting businesses are more cash heavy. So that's just something to know. But he's already created the code and he has Turo income from renting out cars, wants to know if he can have this income come to his LLC. Can he? The answer is yes. Should he? That's a better question. If you're running a Turo business, that's a Turo business. If you're running a real estate business, that's a real estate business. We just talked about earlier. Let me jump back into this. We just talked about earlier that rental income is only subject to federal and state taxes, right? Turo income is 1099 income. That's subject to Fed, state, Social Security, and Medicare, which is self-employment tax, which is 15.3%. I don't want my Turo income going into where my rental income is. I don't want self-employment tax coming anywhere near my non-self-employment tax, my rental income. I would keep those two things separate. One is a passive business, one's an ordinary income business. They should be operating as their own separate entities if you were to ask me what I would do in that situation. Okay. Hello, Carlton. Me and my wife have an LLC. I manage the LLC. This is from R. No other name associated with that. Hello, Carlton. Me and my wife have an LLC. I manage the LLC, and we have 2 rental properties that I manage too. I manage the LLC, and I have 2 rental properties I manage too. I wasn't able to create an LLC for my rental properties. Any way to get other tax breaks? So first off, LLCs don't save you money on taxes. So we're gonna put that out there, right? Like an LLC does not save me money on taxes. What I do with my LLC will save me money on my taxes, right? So we'll just put that out there. Now, you and your wife have an LLC. You say you manage the LLCs and you have 2 rental properties that you manage too. Okay. So your LLCs that you have, I'm assuming you haven't placed your properties inside of those LLCs. So how are you going to do that is probably what you're asking me. And are there any tax advantages to your situation? Based off of what I'm hearing and what we talked about earlier this week, I think what's circling right now is how are you going to leverage the fact that you're managing that property? Do you need to establish a management company? Would it serve you to establish a management company? That would be something that we have to look at. What type of things do we want to write off inside of the management company that you're probably not able to deduct right now? And then also, you said that it's you and your wife. Do either of you guys qualify as real estate professionals? Or will we be able to use any of the rental losses if we did a cost segregation study? That would be something that I would want to look into as well. And last but not least is how do we transfer the properties into the name of the LLC? Do we do a quitclaim deed or do we do a grantor deed? I would look into a grantor deed so you don't compromise your title insurance upon transfer. Man, these are great questions. Here's another one from Anthony Villiani. Guys, are you guys enjoying this right now? Let me take a minute to just stop, because I'm answering a lot of questions. I just want to know, with those who are on here right now, those who are on the live stream, do you like when I go on live stream? Is this something that you like? Is it something that you like? Is it something that you like? Is it? I just want to know. Put in the comments, do you prefer me doing live streams? Is it something that's enjoyable for you? Are there questions that you guys feel like need to be answered more on a live stream versus a YouTube video? Put those questions right now where you're like, Carlton, you know what? These are more live questions. I want to get these ones answered versus like just having a YouTube video talking about topics. Is that something you guys appreciate? Okay. 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 I do appreciate that. Awesome. Awesome. All right. I'm going to go back to Anthony Villiani's question. If I have 2 apartments in different states, how can I use one of the apartments as my LLC office so that I may deduct the rent from my LLC income? Okay, great question. So Anthony, you're saying you have 2 apartments and you want to be able to use one as your business residence and one as a personal space. Let's just claim one as a business residence and one as a personal space. Can't we do that? Right? There's nobody that says that you have to go get a commercial office, right? You could choose to use an apartment space as an office. As a matter of fact, I know there's probably a couple of different like beauty businesses that probably run in like apartments as opposed to like commercial spaces. That's how a lot of people who are in the beauty industry get started. They might rent out a separate apartment, right? So there's nothing wrong with that. Should you have done it underneath the LLC? Sure. Would you be able to write off those rents? Absolutely. So if that's what you're trying to ask, I think that's a great question. Guys, I can't believe I've almost been on here for already an hour. This is so cool. Just being able to jump in here and ask your guys questions. I want to get some harder questions. You guys have any like intense questions? Like, Carlton, I saw this online. How do I write this off? I saw somebody do this. What are some harder questions? Because these are all pretty basic. I want to see if there's any like challenging questions you guys have. Like, Carlton, I'm making $1 million, $2 million, $100 million. Like any type of questions that you guys want to ask me, feel free to throw it my way. I'll spend a few more minutes on here. And I'm just scrolling through to make sure I covered my bases. Have you guys signed up for the Tax-Free Wealth Challenge? Put a T in the chat box if you're already signed up for the Tax-Free Wealth Challenge. Put a T in the chat box if you're signed up. That lets me know who you are. And then what I'll do is I'll have my associate Zach screenshot you, because when we jump into the Tax-Free Wealth Challenge, I want to make sure I say hello to you myself. Okay, here's a good question. Carlton, I recently bought a home, cash in the pocket, invest in more real estate, or keep it cash. A LLC or trust need to be created to hold the assets. I recently bought a home, cash in the pocket, or invest in more real estate, or keep it in cash. A LLC or a trust need to be created to hold the assets. So I'm going to kind of break this question down based on what I think it means, and we'll talk through it. So you just purchased a property. It's a home, so I'm assuming it's a primary residence. You're wondering right now, should you keep some of this additional cash you have in your bank or invest more of it into real estate? Should you set up an LLC or a trust? Does that need to be created? So at the very basics of this, absolutely, I would recommend establishing a trust. Am I an attorney? Absolutely not. But you would need to speak to a trusted attorney. The trust is how we can entrust that your assets get passed on to your beneficiaries. So we have to at least cover our basis. It's like literally trying to line up to the starting blocks of a race with your tennis shoes tied together. What's the point of you even racing? You already know you're going to lose. Like you're already alive. You're already building wealth. What's the point of not having a trust now? You're already alive. You're already building wealth. You got to get the trust set up, right? That's how I look at it. Now, the LLC comes when you're ready to start investing in real estate. Why do we need the LLC for real estate? 1, we might want to have anonymity. 2, we might want to have liability protection, right? And 3, we might want to show the government we're truly operating like a real business, right? Those are the reasons why we would want to go through the extent of establishing a limited liability company. Now, can you get the LLC set up right now? Yes, you can. But are you going to close on an investment property this year? Maybe not. So what happens to that LLC? Well, you just set up an LLC that you don't use yet. Should you have the LLC set up right now? That depends. Are you going to use the LLC to establish business credit? Then yes, you need the LLC set up right now. And you need to start making microtransactions underneath that LLC to build business credit and apply for a DUNS number with Dun & Bradstreet and Experian. All right. Hi, Carlton. What is the best way to transfer? Okay. Hi, Carlton. Here's one that's coming from Ryan. Hi, Carlton. What is the best way to transfer a single member LLC to a new owner? Change EIN number. Change the EIN number. So you can't really change the EIN number of an LLC. It's like once a baby's been born, it's been born, right? You can't unborn the baby. You can dissolve it, right? And completely shut down the entity, but you can't change the EIN number of the entity. Once the EIN number is established, that is the EIN number of your entity. Can you file new articles of organization? The answer is yes. What would that do? It updates a lot of things. It maybe updates the address, updates the registered agent, updates the members who are underneath the LLC. And I think that's what you're trying to do. So the answer is yes, you're going to need to submit new articles of organization to get that submitted to the IRS and to the state that you are set up in. Okay. I think I've finally reached my mark. What I'm going to do right now, guys, is I'm going to let you know that I'm not done teaching for the day. I actually will be going into a live webinar. Today's webinar that I'm going to be teaching on starts in exactly 1 hour from now. So I'm going to get up, go get myself together, grab some fresh coffee, and I'm going to jump into that webinar. What that webinar is going to be about, if you plan to join, because I don't know what your day is looking like, is the webinar is going to start from 11 o'clock, and it's going to be me teaching you how to pay yourself as an LLC strategically. I know I've done a lot of videos on LLCs, and there's one very popular video that is surfacing on YouTube that I did a few years ago on how to pay yourself as an LLC. That was a few years ago. Things have changed. I need to make sure you guys who have LLCs understand what you need to know prior to around paying yourself. If you're watching this right now, I want to make sure that you can jump into that webinar. What I'm going to do is I'm going to have my associate Zach post the link. Is it posted right now? It's posted. Thank you, brother. I'm going to have Zach Burnett post the link, and it should be floating around. That link will take you guys to sign up for the webinar. That's going to start in 1 hour. For whatever reason, you can't make it onto that webinar, I will see you on the Tax-Free Wealth Challenge. That's 5 days where me and you get to spend time together. I get to understand your situation if you choose to go VIP. I'm not going to even mention general admission. If you're general admission, you're just going to be able to watch the live settings from Facebook, and you won't be able to ask questions. I won't even know who you are. But it still allows for you to be in the room. You'll get all the recordings. If you decide to join VIP, you'll be able to unmute yourself, have a direct conversation with me, and I get to figure out how I can best help you between now and the end of the year. And I know a lot of you guys would really appreciate that. So what I'm going to do right now is I'm going to log off. I'm going to get ready to jump over to the webinar. Again, want to make sure that you guys jump into that. It's going to be on how to pay yourself as an LLC. It's a great opportunity for me to show you guys what you can do to make sure that you never overpay yourself with your LLC. I look forward to seeing you guys there. Want to say thank you to all the members who have joined. For those who have commented on the comments section, I got a lot of heat earlier this week for jumping directly into my live and going into my coaching session, mainly because I just have so much that I want to teach you guys. But moving forward, what I'll do is I'll make sure that I'm interacting with you guys and looking over to the side here and viewing the comments. So just wanted to say thank you guys so much. You guys know I'm surgical with this. You guys know I'm surgical with this stuff. So if you guys need me, please feel free to reach out to me. I look forward to seeing you guys on the next one. Cheers.